Good afternoon and welcome back to Markets Today. I'm your host, Mbitha Mwema. Today, we are taking a deep dive and looking at the financials that were released by Equity Group. Third quarter 2019 was up 10% with regards to revenue, and this was up to 17.45 billion. Was that good performance? And what is the future for this bank? We are joined in studio by Mr. David Kingóo. He is an investment analyst at Cytonn. Welcome to the show, David.
Thank you very much.
What were your initial thoughts on these numbers? Were they good numbers? Were they bad numbers? And what were the key drivers for the performance?
The numbers are quite okay based on the self-disruption that we've seen at Equity Bank.
Self-disruption?
Self-disruption.
I like that. What do you mean by self-disruption?
Meaning that when the interest up came,
yes,
so they had to look for other ways of making income, and then they went to non-funded income.
Yes.
They went to mobile banking. They went into transactional cost in terms of what are the number of avenues that a customer can transact. You go to an ATM, they get cash from there. You go through mobile money, they get cash from there. So it's an entire combination of different other avenues that the bank could make money apart from funded income.
All right, so the numbers were good.
The numbers were good, and they really shown a lot of technology in innovation in banking.
Okay.
Because most of it came from there. The efficiency came from
the
there.
The efficiency came from
yes.
that. Were you expecting this? Do you cover the stock, and do you have estimates for this number, for this particular stock?
Yes, we really expected that because we have seen their effort in technology. We have seen their effort trying to maintain or remain afloat. We have seen their effort trying to be a market leader. So definitely we expected that.
Okay. All right. Fair enough. Now let's get to the crux of the matter. Let's start off with our first graph, and that's talking about non-funded contribution. And I like the element, or rather the theme that you're bringing out with regards to self-disruption. What are the channels that this bank is focusing on, and how do we explain the evolution of the non-funded income as we are seeing it out in this particular chart? It was now 41% of their revenue came from non-funded income, which is the channels that you are alluding to. Maybe you can walk us through that.
So what about non-funded income, for example? I just give out the government treasury bills and bonds. So it is favorable to lend to the government with the current interest rate capping that has been there, but it has been scrapped so far. So it was favorable to lend to the government than to lend to an individual who definitely would have some default risk. And of course, with the economic status, you don't trust much of your money in the individual lending.
Okay.
So non-funded income translates into deposit placements. They then would place deposit and that would earn an income. Then they would place deposit in treasury bills and bonds, which has seen around 165 billion placed by Q4 of 2019. Then they also trade in forex exchange,
yes,
and make a gain. So and that's what has brought about the 41% contribution.
Okay, and it's also interesting, I think, in the same chart, just saying that it has been 41% since the beginning of this year. That is in March. Maybe we can still see the same chart number one from our graphics team, and then you can see the banking industry is 37%. So what makes Equity do better and more earnings from its non-funded income using the platforms that you have described over and above the industry level?
Of course, this is driven by the deposit that the customers have trusted with Equity Bank.
Okay.
Because you've seen their deposit grow to around 460-something billion.
Yes.
So they have to place this deposit somewhere. It is money that the customer has placed in a bank and expect a return. It's a liability to the bank. So the bank has to look for an asset side.
Okay,
and that's why they've remained attractively above the market rate in this.
All right. And I suppose then there'd also be a contribution from its different channels, Easy Pay, and the fact that it has been strategically trying to get its clients on that platform. Okay, interesting. The element of funding to the government, I think that's our second slide. What is happening here for this bank? Was that line flat over the period? Were they extending credit to the government aggressively, or did they slow down?
Of course, definitely, maybe with an expectation of the interest capping scrapping off, so it would be favorable to lend to individuals or move to the funded income section that we call about the loan book section. So definitely, probably they held it a bit, waiting to see whether interest capping is removed, and then they moved funds to loaning.
Okay.
So maybe that's the aspect why they kept it afloat and they wanted to increase it, because we can see from December 2018 it's been on the rise.
It's been on the rise,
and then they kept it, maybe at least trying to monitor the market forces and based on the decision on the interest rate capping.
Okay.
Sure.
All right. So this was up 5%, and I think you mentioned earlier 165 billion is what they're actually giving to the government of Kenya. Would you have a sense whether this is on the T-bills, or is a larger breakdown of this to the to the bonds? the longer dated paper for the government?
Definitely, they spread the same to
Okay.
make sure that their portfolio is leveraged in terms of both treasury bill and bonds and based on the maturity level. So it's
Okay.
leveraged across.
It's leveraged across. All right, and then sticking on the same, I think based on the graph that we have put up there, we can see there was a slight downward correction with regards to the yield on government bonds. The same period in last year, it was 11.3%, and I think this particular period was 10.3%. So this is what we're looking at.
So basically what happens is that on the government yield, what happens that it's an average of the CBR rate and what they can get from the customers if they were to give this money to the funded income, and then definitely what they would give to the government. So the difference is what have been there. Okay. And as I say that there's been a lot of speculation and positively to the commercial bank that the interest rate capping would come down, and that's why they have kept the margin at that particular pace.
Okay, so 10.3% yield on the government portfolio.
Sure.
Does this get worse? Does this come to 9%? Does it come to 8% by the same period next year? What are your views on this, on the yield curve generally?
So definitely, as we keep urging the government and the pressure from the economic section is that the government avoid lending locally, then definitely it would go higher to make it attractive, because with the interest capping, definitely interest to the loaning people would be higher. So when they increase, it means it is favorable, it generates more income to lend to an individual than to lend to the government. So then the government have to make their own portfolios attractive by raising probably their returns. So definitely it might happen.
Okay, it could happen. Okay, very interesting. So 10.3% is the number that we are looking at, and that would certainly explain why it makes more sense to lend to the private sector at 13% currently. Then the next slide that we have up there, it's trying to understand the revenue generation and the profitability of its different countries. And I think our graphics team can put it up, and that's chart number 3. It does itemize. There's Tanzania, Rwanda, Uganda, South Sudan, and DRC. What's your sense of the operating environment in all these countries, and what is going on there?
So definitely from the first brief of the Ecobank CEO was about the economic status of these particular nations.
Okay.
So they have safest challenges, including what we've seen in South Sudan. But however, the bank has continued to strive to a break-even point. So the market is a good catch. The market, as long as they keep on innovation and they keep on developing product that are right for that particular people there,
markets.
or for that particular market, then we see them succeed in those industries or in those regions.
Okay, let's look at it differently. Which is the best market of these regional markets in your view? Which is the worst?
So the worst, definitely we saw what happened in Tanzania.
Yes.
And we were challenging still in
what happened in Tanzania?
So I mean Sudan. So
okay, South Sudan.
So
okay.
Definitely the market is good, but what we are trying to see in Rwanda, because of the stability that the government has put there, and the investment condition that is attracting both local and foreign investors to Rwanda, definitely Rwanda is the biggest potential that we can see for this particular country. Then we also have Congo, based on the population that is there, and the unbanked population that is in Congo. So we will see them positively have a bigger market and have a positive growth in those two countries.
Okay, so we could get to a space where maybe in 5 years, the subsidiaries maybe even contribute 50% of the earnings for this particular bank. Now, sticking on that before we take a short break, on Rwanda and DRC, how is the bank entering these markets? Are they setting up traditional banking halls, or are they leveraging on technology to be able to push their presence as well as their products and services in these markets?
So innovation in this particular bank is in the group setup. So definitely the subsidiaries in this particular country have to adopt technology, and it is being rolled out across every nation. But when you look at their entry in Congo, was quite different, because they went into a buy into an existing institution, commercial institution. So they had a customer base that they could ride on and grow. Okay. Despite Rwanda, they had to do a fresh setup across. But technology has been employed across, as it is from the group level.
Okay, fantastic. We take a short break. Look out for the Nairobi Securities Exchange closing bell. We will be back shortly.